Good morning. Welcome to Beyond SEAF Model. I'm Jack Kosar. This is the effective for the week of June 8th, 2026. Let's get started. SEAF signals for this week. We got tech, materials, and real estate. We retain technology and materials and pick up real estate. The one thing I do want to note here is, as per usual, our data runs through Thursday for SEAF Model. This has always been the case. We don't get the Friday data oftentimes until Monday. So for consistency's sake and sake of the model, we always run SEAF Models data through Thursday. So as if you noticed, Friday we had a pretty big day, a down day, a negative 2.16% outflow of the 11 sector spiders. Majority of that outflow came out of technology. 6.5% technology was down in terms of its outflow on a one-day basis. So everything you're seeing here today, all of our charts, all of our graphs, with the exception of our total sector AUM graph, is all with the idea of data through Thursday. A quick note on that. Again, this model has been running. We've back tested this model for the past 8 years. This is how we've always back tested this model. So there are going to be the occasional day where there is a large outflow or inflow on a Friday, which theoretically changes these numbers for this next week, but not how this model is run for the upcoming week. The other thing I did want to point out, even with the outflow in technology, this is going back to last month. This is including Friday. So even with these prices, technology is still outperforming the S&P 500 by a couple of, by 6 or 7%. So, just kind of contextual of things, one day moves. We are still close to all-time highs in both the S&P 500 and technology. Technology a little bit further off, obviously, with the little bit of a stronger outflow. But I just wanted to give the context if you're wondering why we're still showing technology as ones across the board, even with the bad day that it had on Friday. In the part of this taping, the market is currently up 65 on the day. So, one day moves happen. There was a really good strong jobs number, which kind of posed a difficult for the Fed to then make any further cuts as per our commander-in-chief's desire. So, market things happen, and we're just kind of tracking these numbers. But I'm going to just walk through our graphs as usual and just highlight, what we're seeing with the data through Thursday. I did want to bring up the total sector AUM here. This is the data this is including Friday's data that we got today. Obviously, you can see here we crashed through that 21-day moving average ever so slightly for that big down day that we had on Friday. This happens on occasion. We've seen this late December of last year where we have these little brief breakdowns through. What we don't know, because we don't forecast, we're just reading the data. Are we going to get a sustained move under that 21-day moving average, or are we going to check mark out of it? That is something that we will be checking on next week. I do bring this chart up every week just to highlight. As we're, like I said, as we're above that 21-day moving average, we tend to see price appreciation in the S&P 500. When we are below it, we tend to see price depreciation or a flat level in the S&P 500. What we need to figure out here, is this a check mark and we come back up, or is this going to be a sustained move? We won't know that yet. We'll start to get a better sense of that next week if we continue to see a breakdown in assets. But like I said, as of today, at the time of this taping, we are up about 60 in the S&P 500. So this could turn into a blip, or this can turn into a larger move. It is yet to be determined. Highlighting our heat map for today. Again, technology ones across the board here. The other thing key to note here for technology is this tactical month and strategic quarter has a really large amount of accumulation. So that's that momentum through that 3 time periods that allows for SEAF model to pick up some of these trends and stick with some of these trends even through 1 week moves. So a lot of accumulation here in the strategic quarter and the tactical month. What we do not see is a lot of accumulation in any other time frame for any other sector. Materials got itself slightly above zero. Last week it was not, with 0.07 and 0.06 tactical month strategic quarter, so not a lot of accumulation there. And third on the trading week with 0.13. Energy coming in here, 0.23. Other couple things to note, with Friday's data in hindsight, a lot of that money that flowed out of technology, like I said, negative 6.5% outflow on Friday alone. In energy, negative 2.45% outflow on Friday alone. That a lot of that money flowed into XLP, plus 4.9% just on Friday. So again, a little bit of a flight to safety on a Friday run. We'll see if this trend continues going throughout this week. But as of Monday, we seem to have at least stalled whatever rock slide happened on Friday. Communication services coming here at the bottom. Relatively strong outflows for these bottom three, including consumer discretionary. A negative 3.6 outflow on consumer discretionary. Staples at about 30, and communication services around 30 as well. So outflows here. And again, technology continues to be the only game in town. If you look back going this past month, the only two sectors outperforming here were healthcare and information technology. So really light in terms of asset flows coming through the 11 sector spiders. Going into our rainbow charts, technology here, starting to see that little bit of slide here on the relative performance. We'll see what the damage of Friday did on the relative performance here. It's going to be a little bit lower, and we should see technology kind of start to zip off a little bit for next week. But overall, has been strong, and we, like I said, had real nice relative outperformance. This was not erased if you look at the with the updated numbers, but overall, still technology was looking very strong. Materials. So I've been highlighting this a couple of weeks now. Outside of technology, money was not really flowing into any of the other sectors. So even though we were seeing a nice, strong materials with mid to high favored, not really seeing that outperformance in the versus the S&P 500. Again, largely to do with assets not flowing anywhere other than technology. It was the only game in town. So where we normally see sustained parts in that favored, in that relative performance, it is not always the case. And in this case, because we were so locked into one sector, seeing a little bit of a decline in the relative performance versus the S&P 500. We did seem to bottom here as we were kind of climbing up, and we did see positive 0.13 on the trading week. So would I like to see stronger flows coming into materials? Yes, but that it hasn't been the case here, and the relative performance shows it. Looking into real estate, similar things, slowly climbing up into that favored. This is largely on, slightly better numbers than the other sectors. A bit of a sideways trend here in terms of real estate versus the S&P 500, meaning it's keeping pace for the most part. A little bit of a downslide here, but overall, relatively flat, trading in a box here going back to January. Not much to see here other than, kind of reinforcing the fact that not seeing a lot of assets flowing into other sectors outside of technology really for the past month. Energy, just wanted to highlight it, number 2 on the trading week, but like I said, had a relatively significant outflow, the second worst outflow out of the 11 sector spiders, strictly when adhering to Friday, sitting in that neutral, nothing to do here, but just saw it, because the way the SEAF model works is if we start to have these points in time where we're not seeing a ton of that accumulation, any kind of asset flow, even a lighter one, 2 on the trading week, 0.23% increase. We need that 0.4 to really show significance, but any increase in asset flows is going to push kind of move it around the board a little bit quicker as the SEAF model is anthropomorphizing it a little bit, making it a person and not a model that it is. The way it works is it's looking for that next trend. It's looking for that next amount, that next starting of accumulation of assets. So when it's light, we'll see a little bit more shifting going on, especially in that 2-3 spot, just trying to find that next move. So starting to see we creeped up into neutral. Again, nothing to do here with energy, just 2 on the trading week. Wanted to highlight that, as we start to see some flows maybe go into other sectors, there might be some jumps within the model. Last but certainly least, communication services. I've kind of really seen a slow slide for communication services as we've sit in this neutral and avoid. Really strong relative underperformance versus the S&P 500. Really starting to pick up some accumulation when it comes to the tactical month and the strategic quarter in terms of outflows from communication services. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.